Hello everyone and welcome to your Glassnode video report for week 10, 2022. So today we're going on a bit of a deep dive looking at exchanges, and in particular we're going to spend some time on Binance and FTX, which really are two of the largest growing exchanges, both in terms of their futures trading volume, their futures open interest, and in terms of just the sheer amount of BTC held on their balance. So the reason that we want to look at exchanges at the moment is because Bitcoin is in this very interesting and quite delicate equilibrium between the bulls and the bears. And really what we care about at the moment is what is the characteristics of the coins flowing into the exchange. Are they long-term holder coins? Are they short-term holder coins? Are they people capitulating, or are they people just wanting to exit and take whatever profit is left on the table? That's going to be our exploration today. We're exploring that because that's the most likely sell side that could disrupt this equilibrium to the downside. So as I mentioned, we're focusing on exchanges today. It's a fairly nuanced topic, and there's a number of layers to which we can look at it. We can look at it in terms of the overall balances held. We can look at the actual inflows, and we're also going to look at two unreleased metrics from our Glassnode engine room that focus on long and short-term holders, and in particular focus on how much profit are they in with the coins that they're sending to exchange. So it's quite nuanced. Different cohorts of investors, the different amount of profit and loss that they're in, and only focusing on coins they're sending to the exchange. Now, the reason we're going to focus on Binance and FTX is they have seen tremendous growth. We've seen Binance now capturing from 30% 2 years ago to over half of all futures volume at the current moment. FTX likewise has grown by over 2.5 times in terms of both the BTC balance held and in terms of the amount of trading volume over the last year. So these two exchanges really stand out. It's where a great deal of the trading volume actually goes at the moment, and therefore it makes sense for us to really just deep dive and understand how to look at these particular exchanges. Now, just before we get started, please do give us a like, a share, and a subscribe. It really does help the channel get to more people. And we really do appreciate your comments in the section. We really do enjoy going through that. Now, today, we're actually getting a bit of light mode and dark mode. Everybody wins. Light mode for our dashboard to make it that little bit more legible. We have heard your feedback, and we are working on the dark mode in the background. And then we're going to use dark mode for some of the bigger charts where we spend a little bit more time, and even go into Workbench to show you how you can construct some of these more interesting metrics using only advanced data. So that's for people who are looking to just experiment a little bit with Workbench and try out something new. So as I mentioned in the intro, we are really at this delicate equilibrium. The bulls are trying to provide some form of floor, and they're setting it somewhere around the mid 30,000s. And meanwhile, the bears are stepping in size up there in the 44,000s, the 40,000s, and creating this sideways consolidation pattern. Now, for those of you who do technical analysis, this could start to look somewhat like a bear flag, and we really do need to see whether the bulls have the actual support to come in and provide that for the market. Now, simultaneously, we're in this interesting dynamic that we've covered over recent videos where it's really a hodler's domain. There's very, very few new entrants coming into this space, and we really have a hodler's market only. Now, this is very interesting because what we're seeing, and we can see it in our balance on exchanges as well, note that we've really been in this sideways kind of stable inflows, meeting outflows regime. We're very much in this kind of middle ground. And this is showing that both the hodlers are providing sufficient support at the moment to maintain that sideways balance, but simultaneously, we're not seeing a huge inflow of bears to essentially break them and take it down below that $35,000 level. So it's very interesting. The market's in this kind of equilibrium phase where there's not that much support coming in from the bulls, but simultaneously we don't have that much sell side. And this is despite all of the macro and the geopolitical and the financial chaos that the world is currently in. So it's quite an interesting observation that we just don't have any directionality at this point in time. And this is not just in price, this is actually in terms of our overall exchange balances as well. Now we can see that March 2020, which really was where Bitcoin kind of woke up and came onto the macro stage, that was the all-time high of exchange balances. We have 3.1 million coins at that point in time, and we've seen a net outflow of over 500,000 coins through the course of 2021. Now, this was driven by a number of things. There was the GBTC arbitrage, there was institutions like MicroStrategy starting to enter the market, and just overall, there was quite a bit of excitement. That early phase of 2021, almost a year ago, was really where we saw the peak of this bull. Now, since that point, we had our May, June, July period of 164,000 coins on net flowing into exchanges. That was really our biggest break, and we saw that overall bear market trend start to kick in from that point in time. Took about 2.5 months for the hodlers to more or less clean up that mess, and we've since been, really since September, in this sideways consolidation. And we can see that even though we've had a lot of geopolitical and a lot of macro uncertainty, we're still not seeing what you would expect, which is a massive inflow of coins. Now, that doesn't mean that people aren't sending coins to exchange. It just means that they're being met with equal and opposite outflows. So it's in this kind of even balance. So we are in this equilibrium stage. The bulls are providing sufficient support to hold this price level, and the bears are also providing sufficient resistance so that we can't break higher. So really, the market doesn't have a great deal of direction at this moment, which, given the amount of macro uncertainty, is somewhat impressive, but also is a risk, because it means if any kind of expansion of that sell side does happen, it can get a little bit hairy, and we just need to pay attention to that. Now, just before we go and deep dive into Binance and FTX and look at some of the exchange volumes, I just want to characterize the inflows that we've seen. And we're going to look at these metrics, which are again from the Glassnode engine room. These are unreleased at the moment. And these are explicitly looking at the coins flowing into exchanges. And there's two metrics here, and you'll find both of these inside the dashboard that's in the description below. This is our profit and loss. So the color of these charts, green are coins that are in profit, reds and oranges are the coins that are in a loss, and naturally, the more profit or loss they are, the darker the color. Now, we're only focusing on short-term holders of those coins being sent to exchanges. So it's quite a bespoke metric. We're really looking at a particular cohort, the short-term holders, and only the coins they're sending to exchanges, which are the most likely to be being sold. This doesn't focus on outflows, purely inflows. And what we can see is that during all of these major capitulation events, so in the 2018 market, we had 1, 2, 3 fairly substantial capitulation events. This was real panic. Short-term holders, get me out at whatever price. I bought the top and I must exit right now. Now, we can see that this slowed over the course of the bear, and that is also shown by these sequentially lower and lower highs. Now, we then had the final capitulation event. This really is a capitulation. We had the first one after the all-time high. This is the wake-up call, the shot across the bow where everybody realized, oh, wow, this is not a normal correction. This was something bigger. We then had the final capitulation back here in November and December 2018, where we sold off an additional 50% in a handful of days. I was here for this, and this was seriously a scary candle to see. The next scariest candle, I would argue the scariest, was this March 2020 candle. This one here really did have me thinking for a moment, oh no, maybe Bitcoin is dead. Alas, it is not. Now, what we then saw is that in May, June, July, we had a second capitulation, but just note that this wasn't anywhere near as severe as we had back here in March 2020. Now, note that we've also had another, not really a capitulation, but certainly a substantial sell side by the short-term holders, particularly during this consolidation phase. So it's been about a month of overall net losses by short-term holders. But what's very interesting is that we have not reached the same extent that we did back here in June. We've really there's losses being realized, which is generally top buyers who are getting flushed out. But as we've discussed, it's quite interesting that we are not seeing the same magnitude. Now, there's two interpretations of this. The first one is maybe there's actually a whole lot of people who are just waiting for any kind of exit liquidity, and maybe a scary down candle is what it needs to really create that flush out. The other interpretation is that maybe we actually don't have that many short-term holders in the long-term sense. That means that people who are short-term tourists, they're here just for the hype, because most of them really left after May. So whilst they are short-term holders technically, meaning their coins are younger than 5 months, they may be short-term holders who have the intention to become long-term holders. They're actually here for the longer haul. We do have to wait and see. This is a risk that remains in the market, but it's simultaneously bullish and bearish, which again is describing this interesting and delicate equilibrium that we're in. Now, the other metric is the same concept, but looking at it from the long-term holder perspective. These are people who've seen volatility before. They've actually been in the market for more than 5 months. And we can see that overall their spending is declining. They're willing to sell less and less as this overall macro consolidation, because remember, in the big picture, This is a big consolidation period after a very, very strong move from 10,000 to 64,000. We're still in this macro consolidation phase, even though it is a bear market within that context. So we can see that long-term holders have slowed their spending significantly. There's a tiny bit of losses, but really they're spending very little. And remember, these are coins going to exchanges. So we're actually seeing that long-term holders are less likely to sell the more that this consolidation goes on. So this is, in my view, generally a more constructive view. It's more bullish because it's showing that the long-term holders are less likely to sell. However, we always have to keep in mind that we've seen similar patterns here in 2018, and you could argue here in 2019 as well. And really the bottom back here in November 2018 and the bottom here in March 2020 was set following maximum fear when even the long-term holders capitulated. So it does remain to be seen whether we actually need to see one of these events. Right now, we haven't seen it, and we can only really go off two things. What is the likely scenario? What could happen? And what's the probability assigned to it? And the other one is what has happened so far that we can make a judgment call on. And what we're seeing is that so far, long-term holders are less likely to sell. We haven't seen a capitulation event yet, but that doesn't mean that it won't happen, but it also doesn't mean that it has to happen. So we just have to be aware of both scenarios, and particularly given how mobile the world macroeconomically is, we have to keep both of these possibilities in mind. And the last one that I want to look at is this metric here, which is our realized prices. So now that we've established that short-term holders are selling, but not historically significantly, and long-term holders more or less aren't selling, let's try and think about some of the mechanisms as to why. So what we have here is the short-term holder realized price. Now, this is looking at the cost basis. When did every single short-term holder last move their coins? And we're seeing it sitting here about 46,400. And that's at a 15% unrealized loss. So it makes sense that we're seeing short-term holders as the most likely to sell right now. They are underwater on aggregate. Now, we also have here the hodler implied price. This is calculated by taking the realized and dividing by the liveliness. Now, the way to think about this, it's like the cost basis for the market, but it's amplified a little bit. It's lifted from this blue line to this orange line based on how much hodling activity is going on. So when lots of people are sticking their coins in cold storage and hanging onto them, we generally see this will start to rise, and vice versa. If they start spending, it means that the current price is what they believe it's worth. So those two lines will collapse together. So what we're seeing here is that the market, the hodler base, believes that Bitcoin is worth about 39,200, which strangely enough is kind of where we're trading right now. So we're currently sitting at what the hodlers believe is fair value, which again kind of makes sense that we're in this equilibrium type status where we're sitting around what the market believes it's worth. Now, lastly, we have the realized price. This is the total cost basis for the market based on when every single coin last moved. And we can see that we're currently sitting here at $24,000. Now, historically speaking, this has been one of the strongest supports. We saw it back here in 2018. We fell below it, and that really signaled the final flush out event, and we moved into accumulation. And it also caught the March 2020 bottom. So in terms of where there is strength in the market, it's likely that we're going to see that the realized price, if we do get some kind of flush out, it makes sense that there is a strength level down there at that mid 20,000 regime. So that's something to just bear in mind. It doesn't mean that we have to go down and test it, but it also doesn't mean that we won't go and test it. It's a very uncertain market, and we have to prepare for what could happen in either direction. And sometimes it works to actually write down what you're going to do if we go in either direction and then stick to the plan. It can really help you just map it out while we're in this consolidation period. Have your plan, write it down, and stick to it. So now we're going to deep dive onto some actual exchanges themselves, and we're going to focus specifically on FTX and Binance. And the reason that we're focusing on these two is that they have grown the most significantly over recent months. Now, what we can see is that since March 2020, the balance of coins held on FTX has risen from some 3,000 BTC to over 100,000 BTC. It's a significant growth, and the overall market share, if we look at all of the coins on exchanges, FTX has grown by some 2 times in terms of the balance it's held. The total futures volume by FTX over the last 1 year alone has risen from a 3% market dominance all the way to just under 10. So it's more than 3x the amount of growth in terms of total futures volume. And the open interest has similarly doubled over that period of time. So we've seen FTX really expand quite significantly to actually absorb more and more of the overall market share, both on a coin balance, on a volume, and on an open interest perspective. Now, for Binance, we've actually seen this even to a greater extent, but from a much, much larger exchange. It's risen from somewhere around 8% of the overall market volume to holding over 26% of the total coins of all exchanges. So you can see that Binance has grown very substantially. The amount of futures volume that Binance hosts is over 50% now. So it hosts 50%, half of all of the trades that are going on in the futures market. Now, when we think about this, in terms of balances on exchanges, let's actually jump across and look at all of the exchanges to try and just characterize this a little bit more. So what we have here is our balance on exchanges in the stacked format. Now, this again is a tier 2 metric, so anybody with an advanced subscription will be able to see this. And I have turned on here FTX, Binance, and two others, Bitfinex and Bittrex in the orange and yellow. Now, the reason that I've shown these in particular is that over the last 12 months, we've seen these exchanges largely see net inflows. They've seen a growth in their overall product suite. Most of these have futures and options and various derivatives and multiple coins that people can trade. So it's creating that venue that more and more people want to use. And we can see Binance on the bottom here has grown substantially, whilst FTX has grown from practically nothing to hosting over 5% of overall BTC volume. So what we can see is this first kind of characteristic of overall exchanges, right? They're growing in terms of overall market share. Now, the next category includes all of the other exchanges. So I've shown all of the exchanges minus FTX, Bittrex, Bitfinex, and Binance. And you can do this by turning on or off the legend. And we can see more or less the exact opposite. Since March 2020, all of these exchanges have been in net outflows. And note, especially Huobi here in the purple, you saw it grow all the way through the 2018 and 2019 market. And particularly following the ban that happened in China with mining and additional restrictions on investors, we've seen that balance shrink quite substantially. We've actually seen a reduction in overall market share by that exchange. It's showing that there's these big geopolitical and local jurisdictional events that can actually seriously impact the overall market share of these exchanges. But overall, we have two different categories. We have the growing exchanges in terms of overall market share, and we have coins that are essentially flowing out of all of the rest of them, which is showing that decrease in overall market share, but also shows some kind of accumulation behavior that's been going on, and perhaps is actually showing that some exchanges have more products and more things that people want to use, and the market is more or less voting with their money. Now, here I have a Workbench chart, and I actually want to step through how I constructed this because you may find it useful in case you've never used Workbench before. So what I was trying to set up here is I wanted to understand how much is FTX as an exchange grown in terms of its overall market share. So let me turn on or off these different legends so we can step through it. What I've included here is BTC price. So I've gone here, add metric, and I've created price and exchange balance, which is my M1 and M2. Now for M2, you can see that I've got here, this is set to all exchanges. So the orange line is showing all of the BTC held by all of the exchanges combined. Now, what I then added is a second version of exchange balance, but I changed the exchange only to FTX. Now let's turn this one on and we can see here is FTX's exchange balance. So it's going mapped onto the right-hand axis. We can see the overall exchange balance has grown from 3,000 over 100,000 coins. So then what I can do, let me turn off FTX just for now. I then have my first formula. So I go add formula, and it will create this formula bar at the top here. So I've called this metric by hitting this three dots and renamed. I've called this exchange balance minus FTX. What I want to see is what does the overall exchange balance, this orange chart, look like if I remove FTX, if I take away the growth, and we can see that since September, overall exchange balances are more or less flat. This is something that we're going to pay attention to. So let me turn on exchange balance minus FTX, which is M2, which is our exchange balance for everything, minus M3, which is our exchange balance for FTX. And what we see is the pink line, which slowly starts to diverge and is actually breaking down to new lows, even though this metric is trading sideways. So what we're seeing is that if you remove FTX's growth, exchange balances are actually in decline still. So it's showing how big FTX's growth is. And remember, some of these coins may be getting pulled out of Coinbase or being pulled out of Bittrex or being pulled out of Gemini and sent to FTX. This is why we're getting this transition of wealth. Some of those coins, of course, are actually going into investor wallets. But if we remove FTX, we can see the magnitude of how much its growth is impacting the total. So the next thing that I want to look at is if we look at all of the coins held by exchanges, we consider that to be the market share. How big is each exchange relative to the rest? So I want to see how is FTX growing relative to all of the other exchanges. So what I've done here is M3, which is our exchange balance on FTX, and I've divided it by M2, so which is the total. So what I'm looking at here is what is the proportion? How big is FTX, which is smaller, but how big is FTX relative to the total? So if I now turn on our blue chart, we can see, and this is again mapped onto the left-hand axis. I've set this to axis Y5. Just for your reference, Y1, 3, and 5, all odd-numbered axes will be on the left, and all 2, 4, and 6 will be on the right. So even numbers on the right and odd numbers will be on the left. And we can see here that if we go back all the way here to 2019, FTX's market share was 0. And as it started to see more and more coin inflows, it started releasing more and more products, we can see that we're getting this rising up of the overall exchange share. The amount of coins held by FTX has continued to grow. Now, if we go back to July, back here before we had our major rally, FTX was sitting at around 0.8% of all BTC held on exchanges was held by FTX. Now we're sitting up here at 4%. So this is a very, very significant growth. We've seen that over the course of 7 or 8 months, FTX has absorbed an additional 3% of all market share that we've seen across all exchanges. So it just shows how incredible that growth actually is. Now we can run the exact same experiment for Binance, and you'll find that link inside the Week Onchain newsletter if you want to unpick and see how that workbench was actually constructed. But overall, this is a very, very simple model, but can also give you an interesting perspective on how a single exchange is actually growing over time. So thanks for tuning in for this particular session. I hope you found that useful, particularly the exploration of Workbench. If you really want to see more of those, kind of deconstructing some of our Workbench charts, do let me know in the comments. Is that something that I can certainly dive into over coming weeks? Just do some simple exercises and just show you how some of the tooling actually works and how you can start to find some kind of bespoke insights by using some of the metrics that are available to you. So to really summarize this week, we've seen this kind of equilibrium get established where the long-term holders have slowed their spending, the short-term holders are still selling, but not really to the extent we've seen in the past. They are statistically significant. We have seen non-trivial sales, and we're kind of in this regime where the market doesn't have a direction yet, and we see this in our exchange balances as well. Now, within the context of a very, very uncertain macro and geopolitical environment, this market really could go in either direction. And really the right thing to do is to just assess what you will do in either scenario, because both are there. Now, simultaneously, we do have a number of models, whether it's the realized price, the realized to liveliness price. There's a number of models that we can look at to try and assess where we are in terms of fair value, and also what that very long-term support may be down at the realized price around 24,000. So let's really just assess how this market goes. We're going to follow it over coming weeks because it is very challenging and complex to understand. I do appreciate you all sitting here, and hopefully you're finding this useful. Let me know if you need anything else in the comments, and I will see you next week. Cheers.